This podcast channel is about you, successful international entrepreneurs, successful expats, successful investors. Sponsored by HCJ.tax. So, good evening, everyone in Indonesia and in Bali. And good morning to those of you who are joining us from the UK and the US, because some of you have said that you were joining from the UK and the US. Welcome to our weekly live stream, HCJ.tax, a member of Mose Roland. And joining us this morning, we have the pleasure and the honor of Diki Tamawi, who is the head of tax for Mose Roland Indonesia. For those who don't know, Mose Roland Indonesia is the 5th largest accounting firm in all of Indonesia, based in Jakarta with a satellite office in Bali, so close to you guys as well. I'm based in Singapore, so not that far away, same time zone. So we historically, what we would have done is, go through some slides and bore you a bit and then get into the Q&A. But after getting feedback from you guys over time, because as I mentioned, we do this every week, different live stream every week, we realize, hey, people just want to come in and have a conversation, right? So with that in mind, I've asked you guys to submit questions in advance, which you have. And if you haven't done so, feel free to type them in the box below. If you're on Zoom or if you're on Facebook or LinkedIn or YouTube, you can, again, type just below and I'll have a look at it later. But what I am going to do is not respond, because this is not, we're all licensed in terms of being tax professionals. So this is not meant to be advice. We are going to speak generally about the topics. If it is that you want specific advice, actionable advice to your unique circumstances, you are advised to retain someone to advise you accordingly. So that's the right way to go about it. So consider this educational or entertainment, depending on your perspective. And let's jump in. So the first question, someone is sitting on capital gains, crypto gains in the 7 to 8 figure space in the UK. And they're considering their options, and Bali is on their list. And of course, Bali would be on their list. So the question becomes, how does Bali and I guess Indonesia deal with crypto from a tax perspective? Dickie.
Okay. I try to answer the question. So Indonesia adhere to worldwide income regime. So once you stay in Indonesia for more than 183 days in the 12 following months, then you are considered to be domestic taxpayer. Then all of your income around the world has to be paid in Indonesia.
All right, so Indonesia will tax you on your worldwide income. In some regimes, so for example, I guess in the UK and the US, where this person apparently may be coming from, capital gains enjoy a lower tax rate, under certain circumstances, of course, a lower tax rate than ordinary income, like a salary. Is that the same in Indonesia?
No. So Indonesia doesn't have specific capital gain tax rate, but it will, the capital gain will be added up to the other income. And then we'll get the progressive tax rate accordingly.
Right, and the progressive tax rate goes up into the 30%.
So next year is going to be 35% for the income more than 5 billion rupiah a year.
Right. So for the person who posed that question, sitting on crypto games, you're considering Bali. Bali is beautiful, but once you trigger tax residence, you're advised to follow the rules. And the rules mean that if you have a liquidity event, you need to pay taxes on any gains that you may get worldwide. So hope that answers your question. Oh, there's a follow-up from that. Can you recommend, they're asking, can we recommend 2 other jurisdictions which give preferential treatment to crypto gains? Right now, there are lots to, assuming, of course, that you're a crypto investor, not a crypto trader. So a crypto trader, again, it's highly nuanced depending on the jurisdiction. Each one will have its own definition. But just to keep it simple, assuming that you're a crypto investor, so you basically buy and hold, then nearby, you have Singapore, of course, where there's 0 tax on capital gains in general. You also have the United Arab Emirates. So the 7 Emirates make up the UAE, the most popular of which, of course, is Dubai. And there's 0 tax, full stop. You can look at that. In the EU and Europe, you have Portugal, which is quite popular for those who are in the crypto space, as well as certain other jurisdictions. Barbados, if you're on the welcome visa, and the other places. So in other words, you'll be spoiled for choice. Have a look around, and if you want to take a deeper dive into that, you can feel free to reach out to us at help@hej.tax. All right, next question. I am thinking of giving up my US citizenship, and I'm looking at the exit tax. So just for those who may be US exposed, so just to kind of comment on what this person is asking, when you are giving up your US passport or your green card, and we're not the biggest team in the world, but we do 3 or 4 every month. These are 3 or 4 people who are giving up a US passport or green card, right? So we're kind of familiar with the process. You will face an exit tax if you're what is called a covered expat. And the definition of a covered expat is it can be triggered in 3 ways, but the 2 most common ways would be if you look back in the past 5 years and your tax liability has been, let's say, 170,000, or if your net assets, all your assets, your antique, your wine collection, whatever it is, your cars, houses, whatever, all your assets minus your mortgages and stuff, so big liabilities or whatever legal liabilities you have. If those net assets are in excess of $2 million, then you may be subject to an exit tax. So I'm just gonna mute somebody who was, so please keep yourself on mute. At the end, we'll have additional questions if you really need to ask, or you can just type below, right? So if it is that you do trigger that exit tax, by virtue of being a covered expat, certain calculations will need to be made. And this person is asking about RSUs or restricted stock units, which of course, immensely popular, particularly those in the tech space. So I'm assuming this person works in the tech space as well. So it really depends as to whether you should include your RSUs in the calculation. Depends on whether your RSUs are considered eligible deferred compensation. Ineligible deferred compensation, what do we mean by that? If it's eligible, then you don't need to include it in the calculation, as when there's going to be a distribution, when there's a liquidity event later on, after you've surrendered your passport or green card, it'll be subject to withholding automatically from the US perspective. So that's why they make it eligible and deferred compensation. So, right, so like a 401k or whatever the case may be. So that would also fall into that category. So if your RSU is potentially issued by a US company, then it may be, of course, you need to get proper advice, but it may be eligible deferred compensation. If your RSU is not issued by a US company, it may be ineligible. So in other words, it needs to be included in the your net worth calculation to see whether you're over $2 million or not. So just in terms of that mathematical calculation, that's how we treat with RSUs. Hope that helps. If not, feel free to reach out and we can take a deeper dive into your situation. The next question. So could you tell us more about the retirement visa in Bali or Indonesia in general, but I guess the person is asking for Bali. Retirement visa, Dicky.
Yeah, for retirement visa, there is an age limit. Yeah, 55 years old, I think, above. And yeah, you may seek help from the legal counsel if you want to have that visa. I think, Darren, maybe you want to brief some more about the legal requirements.
Sure. What might be easier, what I can do is I can just share screen. So again, if you go to the Moores Roland website, so this is moores.roland.com. That's the website for Moores Roland Indonesia. And I guess if you just Google in general, you'll find a lot of information. But I think the good thing in having support from the team at Moores Roland is that it's not a broker, it's not somebody who may not be qualified. Moores Roland has its own legal department, so you get qualified and experienced Indonesian qualified attorneys who are bilingual, English and Bahasa Indonesia, who can guide you through the process, not just of this visa, but the others. So all the criteria there, including age and so on, and the income that you need to prove, which right now is 1,500 US per month, which is pretty competitive, especially in view of the recent changes in the MM2H, or My Malaysia Second Home visa, which is the equivalent retirement visa in Malaysia, and some of the recent changes in the retirement visa equivalent in the Philippines as well. It just makes Indonesia more attractive by comparison. So again, have a look, reach out to us, and we can walk you through that process. Next question, and Dicky, I think this is another one for you. Someone is asking about working online. So if someone is a YouTuber, for example, or an online influencer, and they are earning money while being based in Bali, whether it's on a retirement visa or social visit visa, how is that viewed from a tax perspective, Dicky?
Yeah, so it will be difficult for the tax officer to get to caught that kind of business, yeah, unless you are quite big and they know you are doing the business in Indonesia and they know your name. They can check your name on the immigration office and they will come at your door and will charge you with the income tax. Otherwise, no. Otherwise, I don't think currently they have the technicality to get the YouTubers income from. They just don't have the data for that.
Right, understood. So, just to kind of recap what you're saying, it's the two angles to that. Depending on the visa that you're in Indonesia with, like a social or retirement, working online technically may be a breach of the immigration rules.
Yeah.
That's the first thing. So you have an immigration problem if you get caught. And then secondly, you have a tax problem, assuming that you do trigger tax residence by virtue of being in Indonesia more than 183 days, for example. So the correct thing would be to fix your visa situation, get the right visa, as well as register and pay taxes. And from our experience, how do they figure out, just to echo what Dicky has said, it's quite difficult for the tax team and the tax authorities to figure it out, unless you're really big. And of course, there was a lot of chatter about the lady, I think at the end of last year, who said certain things on social media, and it got a lot of attention, and she got in trouble from both an immigration and a tax perspective. So that's how they find out. So it could be you're too good at your job as an influencer and you get a lot of attention, which is, I guess, what an influencer is looking for. Or you may have competitors. We've seen competitors who may, for whatever business reasons, or jealous ex-employees or business associates or whatever, anyone can basically report you, and if they are incentivized to do so. And if you're reported and if you're found to be in breach of immigration and or tax rules, you know, you have a problem. I remember being in the U.S. Embassy in Jakarta, and those who've been on this particular Bali talk have heard me give the story before. And I remember speaking to one of the consular officers, just having a chat about what's going on. And they said that, you know, sometimes he has like one or two people permanently dealing with, and this is from a US perspective. I'm sure for the other Western embassies, they may have similar stories. And this is before the situation in 2020. You know, he had staff almost full-time getting US citizens in Indonesia out of trouble. So those who've been caught working, specifically working without permission. You know, it's like a full-time job for one of the consular officials. So the point of giving that little anecdote is just don't do it, because it creates no end of trouble if you do get caught, and people get caught all the time. Not just, it's just that lady on YouTube last year, she was kind of big, but on the down low, people just get caught all the time and you may not hear about it. So yeah, just do the right thing. All right, so moving on to the next question. I've been based in Bali for a while, and I have not been filing tax returns in Indonesia, which you should. And I found out that there's some sort of amnesty program. Dickie, could you tell us more about the voluntary disclosure program?
Yeah, there is one law, harmonized taxation law, that one of the article, yeah, this one, yeah, harmonized tax law. They want to give voluntary disclosure for the taxpayer, yeah. And there are two schemes. There's two policies will be in place for 6 months. For 6 months only next year, starting January 1st to June 30, 2022. Yeah, and the first scheme is only applicable for individuals and corporations who already participate in tax amnesty program in 2016. And yes, 2016. Yeah. So if you are a company or individual tax amnesty participant, then you can follow again the policy, but the asset is when you get the assets below 2015 and below. Yeah, so you can disclose again if there is an asset that you forget to disclose at that time. Yeah, this is the tax rate, the final income tax rate for the asset you declare. 6%, 8%, and 11%. Yeah, 11% for foreign asset declarations. It means that you have maybe asset in Singapore, Hong Kong, anywhere in the world you want to declare, yeah, then you have to pay 11%. Okay. So, and then the second scheme, the second policy is about, you move the slide, it's okay. For the second policy, it's only for individual taxpayers or acquired assets during 2016 to 2020 that have not been reported in the 2020 annual tax return. So this second policy is different with the tax amnesty. When the tax amnesty in 2016, individual and corporate taxpayer can participate in the program, while in this second policy only for individual taxpayers. Yeah, the why they run this voluntary disclosure program, because of the AEOI, automatic exchange of information. So they want Indonesian governments, especially the Directorate General of Tax, want to give times for the taxpayer to disclose by themselves. And the tax rate is much higher in the second policy, 12%, 14%, and 18%. Okay, back to you, Darren.
Okay, so yeah, so I mean, just to recap and to emphasize what Dickie's just said, you know, Indonesia is like many developed countries. If you know, from the US or if you're from certain European countries, it is quite common that you have to disclose foreign assets on your tax returns. In the US, you have the FBAR, the foreign bank account report. You have to report investments in foreign companies and stuff like that. Same in many European countries as well. So there is the actual calculation of your tax liability, as well as the disclosure of assets that you have. Now, if it is you've made an omission in either one of those spaces, you can speak to Dickie and his team, and they can walk you through the process and see whether this voluntary disclosure program, to use the correct term, is the right fit for you and whether you can benefit from this. And to just emphasize what Dickie said at the end, you know, how would Indonesia find out about what you're doing overseas? Well, it's due to the automatic exchange of information. Indonesia their tax office has been pretty diligent. They've been signing governmental agreements with governments in the region, Singapore right nearby, Malaysia, Australia, certain European countries. You know, so basically, that's how governments now have signed agreements and enabled domestic legislation to bypass bank secrecy rules. So before it was information upon request. So like someone had to, you know, like if the Australian government, for example, wanted to find out whether any Australians had bank accounts or business activity in Indonesia, they'd have to, you know, make a formal legal request and may have to go before an Indonesian court of law. And then the court would allow the relevant bank to disclose. And, you know, that process takes a long time. Now it's automatic. Now it just happens. It's just an automatic exchange of information. And you may not be aware that your data is being shared with the country of origin or whichever country you're exposed to. Because as part of this whole new legal framework, which is global, most countries in the world have signed it, except for the US. So most countries in the world have signed it, which means that each bank, so each financial institution, so like all the banks in Indonesia need to go through their books and identify any accounts that may be held by someone who may be exposed to another jurisdiction, even if they don't self-identify that I am Singaporean or I'm Australian or I'm a Brit. Doesn't matter whether they self-identify or not. If the bank has reason to suspect that this person may be Australian, they may be Singaporean, they may be whatever, then by law, they need to send a report. So that's how the information goes. So again, it just makes sense to do things the right way. And if you have assets overseas and you have income overseas that you may not have been reporting, now's the time to reach out to Dickie and his team.
Yeah.
So moving on to the other questions that you guys sent in. Okay, right, next one. If I receive payments outside of Bali, would it still be considered tax? Okay, right. So it's quite common before the whole health situation. I'm close by in Singapore, so we'd be in Bali pretty often and speaking to people who are long-term residents, or maybe they're in co-working spaces and networking events. A lot of people are under the mistaken impression that you can live in Bali, and as long as the money doesn't come into Bali, so they're setting up offshore companies in Hong Kong with bank accounts, they're setting up entities in Singapore, of course, like LLCs in the US, and they think, hey, once the money doesn't come into Indonesia, I'm good. That's not exactly how it works. As Dickey pointed out when he was addressing another question that was posed, when you're a tax resident in Indonesia, you're subject to taxes on your worldwide income. So it doesn't matter whether, I know some people confuse it with Thailand, right? With the whole remittance thing. It's not as confusing as Thailand. I think it's a simpler tax system in Indonesia. So once you're earning money, wherever in the world you may be, or wherever in the world that income may be, wherever in the world that website may be hosted, wherever in the world your company may be incorporated, you are there in Indonesia. You need to pay taxes on your worldwide income and declare your assets worldwide. Simple. Hope that answers you. Moving down the list of questions that were asked. Okay. Have a rental property back in the US. Is it taxable in Bali? I think by now you know the answer to that question, right? Yes, whatever rental property, whatever income producing asset you may have, wherever in the world it may be, the income is taxable in Indonesia, and the existence of the asset must be declared to Indonesia as well. Of course, once you have a tax team that knows what they're doing, you will not be double taxed on the income because there are foreign tax credits. And in this case, between the US and Indonesia, there's actually a double tax treaty in play. So you know you're not going to be taxed twice. Just, it just needs to be declared. Next question. Okay, someone is asking, how can the tax authorities in Australia find out about my business and my bank accounts in Bali? I think we've answered that when we spoke about the automatic exchange of information, otherwise known as the Common Reporting Standard. So that is clear. Someone is asking, from a tax perspective, which is better, Malaysia versus Singapore? So that's an unusual question. It really depends on what you're trying to do, what kind of business you're in. In terms of direct taxes, so normally in a jurisdiction, you have direct and indirect taxes. So your direct taxes would be what you pay directly to the tax office, would be typically your individual, your personal income taxes, whatever you earn, you sign, you pay. And then your company would pay its corporate taxes direct to the tax office, right? But there are also indirect taxes. So that'd be like what they call GST or VAT or sales taxes. And so that's something you need to consider. So generally speaking, Singapore has low direct taxes. So the corporate taxes and the personal income taxes are relatively low, but the indirect taxes are high. So alcohol, cigarettes, so like that kind of sales tax, the GST is, and the duties to bring it in. So things are pretty expensive. But in Malaysia, the direct taxes are going to be higher, but the indirect taxes may be lower. Plus in general, it's a lower cost of living. So it really depends on your situation. You can't say that one is better than the other from a tax perspective. Everyone needs to measure and evaluate it from your individual perspective. And that's a service that we provide as well, because we have a Morse Roland partner office in KL. So if it is that you are considering moving either on your own or with your business to either Singapore or Malaysia, we could model that for you. So we could prepare a model where we model what the taxes would be like if you move to Singapore versus what your taxes would be like if you move to Malaysia. And so it won't be anecdotal. You'll have a real comparison. So that's something we can do. Just reach out if that's what you're looking for. Next question. Well, last question on this list of questions that were submitted in advance. Okay, and then I'm seeing some people writing questions below. We'll get to that as soon as we just finish those that were submitted in advance. So thanks for your patience. Right. So I'm an American, and I have short-term losses from crypto. Sorry to hear that. Some of those coins didn't do too well. can I offset these losses against my ordinary income from a US perspective? Unfortunately, not exactly, not exactly. So if you have a short-term loss from crypto, I'm assuming you're a crypto investor, not a crypto trader. Big difference. If you're a crypto investor and you've lost, you've made short-term losses, those short-term losses can first be offset against short-term gains. That's the first offset. And if you have anything left over in those losses, then you can use that to reduce your long-term capital gains. So first, the short-term capital losses must be offset against short-term capital gains. And then if there's anything left over, against long-term capital gains. And then if there's anything left over after that, then you may be allowed to reduce your ordinary income, your taxable ordinary income, like your salary or interest from your investments, whatever. It may be a lot, but there are limitations on that reduction to your ordinary income. So if you married filing jointly, that'll be $3,000. So anything above that, I don't know how big your losses were, then you get to carry that forward to the next calendar year, the next tax year. So I hope that helps. If you want to take a deeper dive into your situation from a US tax perspective, again, just reach out, just let us know. And so now I'm moving to some questions that someone typed below. So I'm a Brit nomad, so I guess a UK citizen traveling around, still working for my own company. Okay, a UK company, but now tax-free as a non-resident. Will the British government likely be sharing income details with other countries so they can tax me? Okay, let's unpack that. So first of all, HMRC is becoming, and just like most other jurisdictions, I'm not picking on the UK government, right? I'm just saying that in general, many governments are really sensitive about taxes right now. Obviously, they have a lot of expenses related to what's going on. I can't say what it is because then we get censored. So everyone knows what's going on. Governments have huge bills. So every penny counts, right? So to be UK, not UK tax resident, it is probably a little bit more involved than many people think. Yes, there's a statutory residence test. So they count the number of days on US soil. And that's what people would mostly go with because that's quantitative. You just count, oh, I'm not in the UK for the entire year. And the year before that, I'm good. Now, just like other European countries, the UK also has a closer connection test. So yes, I know you're not in the UK, but do you still have a flat or an apartment in the UK? Is your family still there? Such that it can be construed that you have a closer connection to the UK than anywhere else, then you may still be pulled back into the UK tax net. But let's say that you're good, you plan this thing out, and you definitely have severed all ties with the UK, so you're tax-free everywhere, right? If you have a bank account in Indonesia and you would have opened it up, you need to show ID, so you would have showed them your UK passport. Then yes, if the Mandiri, whichever bank it is you're banking with, if they're following the rules, they should be sending reports back to HMRC in the UK. Now, as to what HMRC does with that, it's really up to them. They can say, depending on whether it's worth their while, I guess, if you're doing pretty well, and I'm sure you're successful at what you do, then they may ask questions like, well, okay, he's resident in Indonesia. Is he really resident there, or does he have the account and is he moving around? And if he's resident there, Indonesia, is he paying taxes there? Oh, he's not. Maybe he should be paying taxes with us. Let's send him a letter, right? At the last known address that we have for him. So it could create situations, false alarms, because you could be genuinely properly resident in Bali right now, or in Australia or wherever, and therefore not with the UK. But it does not stop the UK from asking a question. So the moral of that story, as I said before, is to just make sure that you're straight. Just make sure that in all the jurisdictions in which you may be exposed, that you're doing the right thing and you're filing the necessary reports and you're paying any taxes that may be due. So then you have nothing to worry about, right? Hope that helps. Okay, I'm just gonna have a quick look in some of the other platforms to see if there are other questions being asked. In the meantime, yes, feel free to type your questions below. I'm gonna have another look at, I'm gonna look on LinkedIn. Okay. All right. No questions there. And on YouTube. Okay, we're good. All right. Okay, it's all right. So someone is asking, I won't call your name, right? But is perpetual travel with short visits to various countries still viable? That's a great question. And I guess there are two angles to that. Many countries aren't like fully open the way they used to be. So for, like Thailand, you may need to enter on something like a long-term visa, like a Thai elite visa. Similarly, for Indonesia, they may only at this stage, many countries aren't allowing foreigners, or if they are, they're coming on some sort of long stay visa. So in that case, just being a perpetual traveler and dipping in and out may be possible with some jurisdictions, but may not be possible any longer with others. That's purely from an immigration perspective. From a tax perspective, just looking at a trend, and again, this is a trend that happened before the present crisis, but the present crisis has accelerated that trend. There's a trend towards governments being more vigilant when it comes to taxation, and there are fallback rules that apply to many jurisdictions that may not have been in existence or may not have been enforced previously. So like in Europe, you have that closer connection test. And in some European countries, even though you leave, you are still deemed to be resident for a number of years. And it's a bit of a process for stubborn residents. In Canada, the situation with the tax office in Canada is similar to the ATO in Australia and in New Zealand as well. They want to see, they really have a problem with perpetual travelers, in that if you're a citizen or if you're a tax resident in Australia, New Zealand, Canada, then they want to see, well, we don't get that. We don't get that you can just be traveling around and not have a permanent base. And if it is that you cannot prove that you're a bona fide resident of another jurisdiction, like show me a long-term lease, show me a gym membership, show me you're paying utility bills. If you can't do that, then the fallback rule sometimes is ATO in Australia will want to tax you, same in Canada, same in New Zealand, and under some circumstances, same in the UK as well. So it really depends, but generally speaking, the idea of being completely disconnected and traveling around tax-free is becoming more and more difficult. So we've spoken about the immigration challenges, we've spoken about tax, and last but not least, it's banking. If it is that you are independently wealthy and you trust fund or whatever, then that's fine. That's a different conversation. But many people are nomads and they're still working. If you're working, then you're doing something online, presumably, and you are being paid into a bank account. Now that creates a separate challenge that we've seen with quite a few clients in Asia. So I like to give the example of a DJ that we were working with. He's supposed to be popular. I'm not into EDM, so I didn't know who he was, that he was famous, but he has been living and traveling around Asia for quite a few years. And he's done well for himself. He's pretty popular. So he has quite a decent sized bank account in a certain Asian country. I won't say which one it is. And he had a problem back in his home country. He's originally from Europe, and he had to go back home. His his mom was unwell and he had to go back home to his country of origin. And to take care of his mom and just to settle back into where he was born, grew up, went to school. He had a bank account from like since he was a teenager or whatever. And he wanted to transfer the money that he had been making outside back into his European country of origin. And guess what the bank said? Well, hold on, where's this money coming from? And of course he explained that, well, don't you know who I am? I'm a DJ, this is what I've been doing, whatever. But the bank was just very cautious and they wanted to see, well, I understand what you've said and I understand how you claim to have earned that money, but can you prove it? And, different banks or different financial institutions, different countries, they have different levels of proof. The burden of proof is going to be different. But I think what most people would agree is that a bank will feel comfortable if the money is supported by a document issued by another country. Because if invoices, given anybody 2 minutes with Microsoft Excel, they can produce invoices, right? And receipts, so that means nothing. But if you have a tax return that you filed back in Bali or Chiang Mai or Bangkok or Singapore or wherever it is you were, if you have a tax return, when you go back, your bank will feel comfortable. Yeah, this money's okay. This money's legit. This is the amount, and you pay taxes on it. But if forget immigration, forget whether you pay tax back in that country. The problem is if you want to move that money from bank to bank, you may have a problem. And then we've had other clients, they're not trying to move the money. They've just left the money in there. And then the bank manager, the bank officer with whom they've had a great relationship for years and years has then, sent them an email, we need to talk and come on in. And so they go in. I know you've been with us for a really long time, but we're getting a lot of pressure from upstairs for our paperwork. Can you show us tax returns? Can you show us how you've been earning this money? I know how you've been earning the money. You and I, we're friends. We know each other, right? But do you have any paperwork? And if you don't have any paperwork, we're going to have to give you 30 days to get the money out of our bank. Otherwise, we'll prepare a check and we leave it for you to pick up. So you basically be kicked out of the bank. And that is happening more and more often. So if it is your perpetual nomad, if it is that because there's so many websites where this is hotly debated, traveling the world, living tax-free, from an immigration point of view, yeah, maybe you're able to do it. If you're not American, from a tax perspective, yeah, maybe you'd be able to do it as well. But from a banking perspective, you may find yourself locked out of the banking system. And yeah, so over to you. I hope that helps answer your question, sir. All right. I'm just going to have a quick check to see whether there are any more questions. And I don't think there is. Right. Thank you for joining us. And as I mentioned, HEJ.tax, have a look. We do this every week, just different jurisdictions, different topics. If you want to reach out to Dickie and his team in Indonesia, office in Bali, and in, of course, in Jakarta, the main office, feel free to do so. I had the website on the screen earlier. It's moors-roland.com. And you'll see Dickie and all his colleagues, and you'll see all the contact details. Feel free to reach out. In that case, thank you very much, and we'll see you next time.
Thank you. Bye.
Here are 4 ways we can help you. Number 1. Sign up for free webinars on US expat taxes and international entrepreneur taxes at www.htj.tax. Number 2. Stream premium educational videos at www.htj.tax. Number 3. Contact us for tax optimization consult over Zoom. Number 4. High net worth. We can quote for doing your US international taxes returns. Our books and upcoming event are available at htj.tax. Please subscribe, like, share, and comment below. Email us at help@htj.tax to engage us, to advise on international tax or business matters.